Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning. Welcome everybody to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. It's good to be back. I missed you guys. You take one day off and it messes with your flow. It messes with everything. But good to be back. I'll bring Joel and Dennis on. I'll just bring them on now. What's good? Here's Joel. There's Dennis. Good morning.
It messes with your mic too, Spencer, when you take one day off.
My mic.
Again, that mic.
With my microphone. You're right.
Yeah, it does.
Mike, it messes with everything. Your morning routine, it gets all disrupted. It's like a whole thing. Back in the saddle, figuring things out as I go.
It happens when you get old.
Yeah.
Joel, the segue. The quick segue.
I had the old weekend birthday trick, I think. So
30 years old. We better sing happy birthday to him. Although I'm a terrible singer, so I'll let Joel lead the way.
You better not do that, actually.
How about your kids? Where are your kids?
Oh, his kids, you mean?
Yeah, to sing happy birthday.
Oh, yeah, we could bring them in. They'd be pretty good. I thought you meant Spencer was having kids. I was like,
no.
whoa, something new just happened.
Better get there. I had a kid. I had a kid when I was 29, Spencer. I don't want to put any pressure on you or anything. But anyways.
Got a lot of that this weekend, I'll tell you. All right. We got a big media merger. We got to talk Bitcoin. We got a lot to get to. We got two guests today. Tim Quast at 8:35 and Matt Hammond to talk IPOs at 9. Do us a favor. Get the week off on the right foot. Hit that like button. Thank you very much. Joel, bring up those charts. And how we doing this morning? How we doing the weekend?
We're in the red, Fred, by 19. Let's call it 19 handles.
Don't call me Fred.
40. That's what I always used to say that to my kids. It's time to go to bed, Fred. They still talk. They still remember that. Let's go. Where's my charts, boy? I got some Spenceritis here. Hold on one second.
I don't know.
Wow, we're falling apart here, man.
Yeah,
wrong mics, wrong charts.
We're down
years
19
old,
handles,
everything
41.50. We ticked Friday's high, 78 and a quarter. We went 2 ticks lower. And then we turned. We've just been drifting lower all night. We got some support, but I'm going to keep it a secret. We have crude. That's down 25 cents to 65.12. Colonial Pipeline back online. And now gold battling 1850, up 980 at 1847.90. Silver working its way towards $28. That's up 33.5 cents at 27.70. And Bitcoin, that will be what we'll talk about at the beginning, down $4,570, 45,620. Triple D&I came to conclusion last night. It's going to 35,000. It just yeah.
Where is it? Show me this Bitcoin. So it's
right
40.
here.
Bring it back up. I know you just took it away though.
All right.
Okay, here it comes back. 45. Here's the trouble.
That's a monthly.
Here's the trouble is that basically social media is impactful on everything. But when you don't have really any fundamentals like Bitcoin trades off technicals, you have commentary from social media that really pushes price. It cannot be denied that Elon Musk is very influential in the crypto world. We saw what he's done to Dogecoin. He has apparently fully turned on Bitcoin here. He hasn't sold it all yet. He confirmed this morning, but he is talking pretty tough love for Bitcoin here. it could be a sale imminent on, and obviously, he's now moved to this doggy coin thing, and I honestly just think he thinks it'd be funny if we'd all transact in doggy coin, which is why he's starting to push towards it. But if Musk is going to continue to be against Bitcoin and continue to talk it down, there's going to be an impact here on the price. So, and then you look at it technically and you're like, well, one, the technicals are broken. Two, you got Musk talking it down, and literally he's knocked probably $6,000 or $7,000 off of the price now, all thanks to Musk. It's hard to be bullish unless Musk is going to turn around and, say, okay, yeah, no, I've got it wrong, and I'm with Bitcoin. If he's going to continue to talk it down, it's going to continue to spook a lot of people and a lot of investors. So it's tough. It's tough to be long Bitcoin in here. I do agree with you, Joel. You said on the technicals, there's not much in there till 35,000. I'm kind of seeing the same thing. We had the ridiculous run up from 30 to 60. It felt like overnight. We know what goes up quickly can come down quickly. And when you come through the same area here, I've sold half of my Bitcoin. I sold it, we know, about 7 or 8 days ago. I kind of wish I would have sold it all.
Why is this? I mean, I know he doesn't run the company anymore, but you have a stock that's, $300 off its all-time high. You had a good earnings report. I mean, I don't know when he's getting so far out of his wheelhouse. The small amount of shares that I hold, I don't want to hold. And it's just
of Tesla. You're losing me here. So we're going back to Tesla now.
Well, yeah. Well,
okay.
It makes me worried about the stock and the company Tesla. And just like, why is he doing this? Like, doggy coin, Bitcoin. I mean, why don't he should just shut down his Twitter account and just focus on making a few more cars.
Joel, he's having fun. This is
what he kind of reminds me of. He kind of reminds me of so Magic Johnson was an executive for the Lakers, right? And he stepped down, he resigned, and one of the reasons he gave for wanting to resign was he basically wanted to be able to tweet his opinions, and he couldn't do that when he was because he would get fined for tampering and stuff, and he wanted to tweet about other players, and everyone made fun of him. He was like, dude, Magic Johnson just quit his job because he wanted to tweet about basketball. And it's kind of the same thing here, right? Where Elon Musk, I think, just late at night just wants to troll on the internet, and he can do that, but it's also weird because he's a CEO of a public company, and it's hard to be both a troll and a CEO of a public company at the same time. You really got to pick one, and he's being both, and it's very confusing, I think.
I think you have a legitimate concern, Joel, that obviously it's not only that, it's that if he keeps pushing price around, at what point in time do regulators say, okay, enough is enough? You're pushing the price completely with your opinions here. I mean, it's free speech. We get it. Everybody seems to talk their book on the street anymore, and social media has really allowed everyone to talk their book. But there's nobody more influential than Musk. I mean, he has literally, and there's people arguing with me. I mean, this is a crypto. You can say it's a technical sell-off for Bitcoin. There's absolutely no doubt that this was kicked off by Musk. I mean, if you're trying to just say, oh, it's just a technical sell-off and it's just coincidental that Musk was tweeting about it, you don't know what you're talking about. I mean, literally, he did that tweet, and Bitcoin dropped $6,000 in the next 20 minutes. So Musk knocked it down. There's no doubt who knocked it down. That's not even debatable. The question is, does he keep talking it down? Obviously, as he continues to talk, it's not going to be as influential as it was the first time, we know. But there is a concern here, if you're long crypto, that you've got one of the main supporters who was actually driving the bus higher at one point in time, now seeming to want to take the bus off the cliff. That's concerning to me if I'm a Bitcoin holder.
Well, it's just it just goes to show you really shouldn't follow anybody.
But they do, though, Spencer. That's what the market does. You have to follow people, because if you don't follow what they say, you get left behind. I mean, if you're sitting here and just going to ignore everybody's commentary, that's what's moving the markets. I don't like it. I wish we could go back to having no social media influence and trading off of fundamentals and technicals. But this market, not just crypto, stocks, are completely influenced by social media commentary, analysts' opinion, normal people's opinions, people on CNBC, random people that come on CNBC's opinions. It's an opinionated market, and the opinions are moving price. It sucks.
It's fake opinions too. It's fake opinions, heard of fake opinions, And you know what's going to happen? And I saw this. I didn't read the article, but he keeps this up. If the Reddit crowd, turns on him, and
you think they start hitting Tesla stock because of this?
Yeah,
There's an argument there. There is an
Yeah.
argument there.
I
I won't say
not-
that's an absurd argument that, some people could be taken out and saying, let's get Tesla. If he's going to start taking our crypto down, let's go get Tesla. I mean, that's already being said in social media. I'm seeing it in my Twitter pages. So does it get the Reddit crowd enough ticked off that they start hammering? I don't think a lot of the one thing in Reddit, I don't think there's a lot of people shorting stocks in Reddit.
Exactly.
So it's not as easy to just knock something down when you're unwilling to put on a short. So that's why, even when you see analyst opinion, you notice this on CNBC. Somebody will talk bullish on a stock, the stock will blast off. Somebody will talk bearish on a stock, it doesn't go down as much because you know what? 95% of retail is in shorting stocks.
That's true.
So they're not gonna. It's not gonna knock down as quickly as it's gonna go up, where they can easily hit the buy button. They can sell their open positions, but once their position's gone, that's it. So I mean, it's not as easy, obviously, from a retail perspective. I don't think Reddit. I think there's some traders shorting stocks on Reddit, but I would imagine the majority are not. So I don't know, but technically speaking, Tesla doesn't look great either. It didn't have a great day on Friday. I mean, think about everything ripping up on Friday. SPY, getting most of its losses back for the week in one day, which is unbelievable. But Tesla up a little bit, but not above 600. It's obviously in a clear downtrend now. We know we went to a value-oriented market. There's so many arguments against Tesla here. I absolutely would. This is the one stock, if I was looking, I would absolutely not want to own. If you put a list, like everybody says, what's your 10 favorite stocks? This would be one of my 10 worst to own right now because I think there's a lot of stuff working against it. It's a new market where value is winning, and Tesla is the opposite of a value stock.
I mean, what happens when you make a major low, you have a major bounce, and then you come down and you sit in this area too long? I mean, can we draw the conclusion that 539.49 low, that's it? That's the lowest Tesla's ever going. It's turning back. It's going to go back up to 700, 800, 900, 3,000, 4,000, 5,000. The longer it hangs out down here, the worse it is. I mean, it always seems to have these rallies, but here's a point. I don't know when Tesla's done this before. Actually, it did it here, so I better watch what I say. But 1, 2, 3, 4, 5 lower highs. Boom, here. 1, 2, 3, 4, 5 lower. I mean, it's not a good looking chart, and your last 3 months. I mean, you need before you get excited about this stock. Let's see a green candle on a monthly chart, and I don't think that's going to happen this May.
So, you've talked to the investment committee though, and they're unwilling to sell?
No. It's like no,
we're not selling Tesla.
No.
So Joel's been talking against his book in this one for about a year now, I would say, maybe longer. She's actually been right though, your wife, because me and you want to sell this, and let's call it. We've been bearish the stock for a long time. So
yeah, I've been wrong. Probably more wrong than right.
Oh, I have too, probably on Tesla. So obviously, maybe we're wrong here again. We're just giving our opinions. We're giving our opinions on a widely traded stock. It looks broken to me. The technicals look broken here now. And we're in a market that is value-oriented. I feel like now is the time rallies to be sold and sold short, in my opinion, on Tesla. I still think it's going under 400 eventually.
I feel like Joel's. Do you remember that scene in Wolf of Wall Street where they were like he was like gonna get out, gonna sell, and then he's like, I'm not selling. Remember that? I feel like Joel's life is an endless series of that scene just playing out, where he goes to Lisa, we're gonna sell, right? And she's like, yeah, sure. And then again, it gets the moment she's like, I'm not selling.
The GameStop. I mean, that was like the biggest argument that we've had, and coming up on our 32 years of age.
You won on that. You sold the top. The Joel Elconin top is the 350. Joel sold the top.
I had
on the closing basis. You basically got the high right near it.
Actually, I think Luke did might have sold some at 420.
Hot Stocks Luke?
Yeah, Hot Stocks Luke did. But
wow, 420.
Yeah.
He just did it because it was a fun number.
Yeah, exactly. But okay, this is not the Tesla. This is not the Bitcoin show.
Let's go. We had to talk Musk. We had to do it. Let's go.
We got a big merger this morning. Big
yes.
Merger. Yeah.
Yes.
Joel likes complicated mergers, I guess. All right.
No,
I like stocks that I own doing something that I like. One of the few additions to my portfolio. And what do you guys say? A super extra large than usual position? Is that how you guys say it? Like a double?
AT&T? You got AT&T long?
Yeah. I had to. I mean, it sit there. I wanted to do it before earnings, and I didn't, and I regret it. And I'm just like, 6%. I just can't get 6%
I've been wanting to
out
buy
of
it
my
too,
head.
but
I can't get 6% out of my head. Now, if inflation goes to 10%, it doesn't mean anything. But it was just like, it hasn't appreciated. It did do a Viacom thing. One of Emily's friends is in their commercials. I mean, all the ducks were in a row.
the
And
only friend in the commercial. That was it. I gotta buy it now. I gotta help my kids' friends out.
you know the commercial during the Super Bowl where they're like, who's that crazy looking guy they had on there about spam calls and everything? You know what I'm talking about? He had the long black hair.
No,
And she was like the person. No,
we
okay,
don't
I
know,
should have
Joel.
my information better.
In any case, AT&T is spinning off a Warner Media unit, which if you remember it only acquired in 2018, and at the time they paid $85 billion for Time Warner, which they promptly renamed to Warner Media. They are now, and they fought the DOJ while they were at it, and they won. And now here they are 3 years later. They're spinning that off into combination with Discovery. It's going to be, or with Discovery's media assets, they're going to combine that into a separate publicly traded company. Discovery shareholders will own the majority of the company. I'm sorry, no, AT&T. Discovery shareholders are going to own 29% of the new company. AT&T shareholders will own the rest. It's basically going to combine, Time Warner Media with Discovery. So it's like it's HBO, it's Food Network, it's Discovery, of course, it's HGTV, it's all those reality assets from Discovery plus HBO and Warner Brothers and TNT and TBS and CNN and all those assets from Warner Media. So that's going to be merged into its own company. They're using a complicated merger tax efficient tool, so they're not going to end up paying taxes on the deal. But
nice,
yeah. So it basically they basically said, hey, we need to figure out how to compete with Disney and Netflix, and so let's just combine all
of our good assets
into one super good asset. So if you're AT&T, HBO has sort of been like the one of the growth drivers, if not the growth driver for the last couple of years. They got HBO Max. It was a whole thing, the rebranding, and now they're saying, all right, we're going to spin that off, and we're still going to own a chunk of it, but we're going to spin it off and have that do its own thing. So,
well, Joel owns a share, so let's get his thoughts first, because I don't own it. I kind of wanted to own it. I don't know if I want to own it less after this, to be honest with you. But
well, if I would have saw it anywhere near 34. Popped up there several times. I mean, that's just, you just got to have too much stock to, in the book. I mean, I've seen this roll over on days like this. I'm not buying, I'm not selling. Maybe if it came down, I want to buy more. So maybe I was waiting for a gap fill after earnings. They laughed at me after that. If this thing can come back 32.5, 32.75 area, I'd like to add to it. And, but I mean, just look at all those highs in that area. I mean, and this is on the 15-minute. We haven't been up near 34 in a long time. So super extra major resistance right near those pre-market highs. Actually, 33.24 was your June of 220 high. So this is even high for AT&T. I mean, how much stock is it traded, Dennis? How much do we need in the book for this thing to, open at this area?
It'll have trouble even opening over 33 in my opinion.
I think so too.
So I think it's going to come in more. It's done 3.5 million. It's going to do some stock, but I just think this is looking as a better deal for Discovery than it is for AT&T.
Yeah,
and I get concerned that AT&T is spinning off, or going to, divest themselves of some of their best assets and hold all the crap. So I'm not exactly sure this is a great deal for AT&T. Well, I'm very surprised that they rallied it this much. AT&T. I'm not surprised the Discovery rally. It seems like a better deal for Discovery. Of course, I'm not chasing something up 22%, but I think it's a lot better deal for Discovery than AT&T.
Well, and it was the WSJ that pointed this out. So if you think back to Randall Stevenson, who was the CEO of AT&T prior to John Stankey, they made two major deals, right? Their two largest deals of the Stevenson tenure. It was the DirecTV deal and it was the Time Warner deal. And now in the first year and change of John Stankey's tenure as CEO of AT&T, he has now unwound both of those deals, right? They sold out of DirecTV, and they're now doing this Time Warner spinoff thing. So they're now basically just undoing all that work. And remember that they fought the DOJ for like 2 years because the DOJ was like, well, AT&T is a cable provider, so they're going to own the content and the pipes, antitrust
to get to
right.
And now they're spinning it off.
Right, and they fought and they won, and now they're spinning it off. So it's like,
but it being an AT&T shareholder, aren't I going to get part of that new company?
Yes.
Yeah.
Let's not.
I mean, someone says your thesis was dividend growth in HBO. You know what? The most thing I was concerned about with this company was their debt, and with rising interest rates,
that's
to do this, to pay this debt down.
Are they going to be? Huge. No, wait though. How much are they going to be paying down?
I think they're getting $43 billion on cash out of this.
AT&T's going to get $43 billion, and yes,
$43 billion, Dennis.
They
pay down the debt, baby.
I read at the this morning that I guess after the Time Warner deal, AT&T was the most indebted non.
Yeah, that makes me so happy. That was the first thing I thought of.
So yeah,
when I saw that the deal, the first thing I thought of was pay down that debt. Yep. Interest rates are going up. Eventually.
What are you left with though if you have the legacy company? I think I look at
dividend.
But what's going to be servicing that? So you get rid of the debt and you get the 6.2% dividend, but you're talking their cable operations is going to be like the big bulk of the money here now?
Yeah.
Not content, just legacy cable.
Oh, the content's, I mean, the
content's going to be spun off. You're going to get that in the spinoff. So that's good.
So I still
you take that. But are you going to stick with the legacy company after this?
Yeah, I mean, it's a telecom company at heart, right? So
with the wireless. So you got yourself, but I've said for years, I do believe that wireless is going to get cheaper. I think competition's coming. Maybe I've said this for a couple of years, and it hasn't really come, and they can continue to charge me an absurd amount of money for my cell phone service as well. But I do believe eventually we're going to have a hell of a lot cheaper phones. So I don't know.
It doesn't
make me want to hold the legacy company. I'd be more interested in the spin-off company.
Oh, that's something I'll consider. The thing that I was most concerned about was them, somehow having to cut the dividend. No. And if this
protects it more, you figure.
That's what I figure.
Yeah, that's a dividend cut is probably off the table now.
Oh, for sure. Off, and when all this debt,
right?
Off. It's just like going forward. What am I investing in? If I'm going to invest in AT&T, if I'm not getting any content now. There's some considerations there, but I get it from the dividend perspective. If they're that concerned about the dividend, they want to get rid of the debt that they're under to be able to support that dividend. Maybe this deal makes sense for them.
Discovery, I mean, this thing needed a pop. I mean, this is bag holder central. I mean, there are people stuck on this. So, if you did a short-term trade with this, I think you guys know what I'm going to say about this stock technically. So let's move on.
Also, I should add AT&T. I think will issue some sort of special dividend out of this, or they expect here. AT&T will expect an annual dividend payout ratio of 40 to 43% from more than $20 billion of expected free cash. So yeah, dividend safe, dividend rock solid.
We hope so. I mean, we don't know for sure, but that was the one thing in the back of my mind when and Dennis, you mentioned it a lot.
We've said it for years that long term, that supporting that dividend could be an issue with the debt. We've talked about AT&T with the debt a long time, so it does help. So it helps with the debt issue. That's a good thing.
And why can't this stock go back to $40? I mean, it's a value stock, right? And now it got rid of some of its value, but it paid down its cash. This thing hasn't caught a bid, right? If the market tanks, people are going to be looking for a place to hide. I mean, if this, even if it doesn't go up, I'm not holding this because I think it's going to $40. I'm holding this to get paid.
Yeah.
And this increases the chances of that happening.
So maybe do you want to pull up, you want to look at Discovery here just for this morning and just take, because it was at 42, it's at 40 now.
Everyone knows what I'm going to say about this, so I'm not gonna.
Well, I don't have any idea what you're going to say about it.
Yeah, I don't really know either.
Everyone knows, but
I think everyone in the chat does.
What
are you going to say? It. Just say it.
Pre-market high? I don't know.
Yeah,
it's come off the highs.
Yeah.
So you think we've already topped out in the pre-market?
Sure.
Okay.
All right. Let's
move on.
All right. Well, on that note, Netflix is down on this headline this morning. Disney is down-ish a little bit. down a little.
That's just with the overall market, really. I don't think it's impacting it too much. That they're like, oh my gosh, AT&T and Discovery are coming for us.
No. Look at Netflix. What do you mean?
It's down 1.9%. With Q's, it's got a higher beta, 0.5%. I'm going to say it's going to be down 1% no matter what. Maybe it's losing an extra 1% because of this. It's not like it's down 10% on it. I don't think this competition is from Discovery and HBO is something for Disney or Netflix to really even concern themselves about. Disney and Netflix will continue to be the players in this industry. There'll be lots of other streaming competition coming from everywhere. Just because you merge, Discovery and AT&T and Time Warner assets doesn't make me concerned that, we're all going to unsubscribe from Netflix and Disney Plus, and we're all going to subscribe to HBO. Like you said, Spencer, before, is you can kind of subscribe to all these things if you cut the cord.
Yeah.
They're expensive. $7.99 Disney.
Never get the cord.
$15 Netflix.
Yeah.
Give me a $7 or $8 or $10 HBO Max. Maybe I subscribe to them all too. I subscribe to Netflix and Disney. Maybe I'll do the other one too.
Mm-hmm. The Netflix, that's just struggled since its last earnings report. There's no doubt about it. You do have three higher lows, so that's good. But getting knocked down again today, teetering on the low of the move, 478.63. That's the only number you have. You want to see that hold today. I think you might find, I agree with Dennis. I think you might find buyers a little bit. I missed the dip. I missed buying this at 480. I don't even know if you'll get a shot of that today. I do want to talk about the House of Mouse here from Friday. Yeah. And it's so funny because we start following, obviously I'm following the price action in Disney right after the report, right? And see what happens. And it dives and then pre-market and everything. So the only thing I'm thinking is, wow, is this 169 buyer? This guy was there in the pre-market. He was there in the after hours. Is this going to hold in the regular session? So it gets to 168.78. I blink it's at 172. I blink again it's at 173. And they come on the CNBC. Oh, Disney getting hammered today off the earnings. Such a poor report, poor price action. And I'm thinking, man, that's pretty good price action. It's had a 4-point bounce off the low on earnings. Could this be the turn in the House of Mouse? I don't know, but man, that's one hell of a level to hold up like that. And obviously the buyers had to step up, but it's getting knocked down again today. You want to get over 175, fill that gap. I could see it maybe not today, but this week gave a little gap fill in Disney.
I owe Joel a debt of gratitude, and everyone in the chat actually who told me not to buy Disney on Thursday. I didn't. I listened. Thank you, everybody. You saved me a few dollars. I will be buying Disney today. Some more Disney.
You're gonna buy Disney today? I might buy Disney today too.
Well, I was out. I was out on. I was doing things with my family on Friday. I was a little bit busy. I would have bought it then. I was just too busy to do it. And I'm back today, and I'll buy more today.
I actually already have it written on my sheet. I was going to write it down, but it's already written on my sheet. 171 is where I wanted to buy Disney.
Nice.
On the pullback for today. So I just think this is the ultimate reopening trade. The park's going to reopen. Eventually, the dividend's going to get reinstated. I think there's a lot of good news to come. As long as we're getting past COVID, I kind of like the Disney play.
And it was oh man, that report provided a great case study for me at least in just interpreting information, because I was moderating our conference, so I had the time to look at. I was looking at the release as it came out. But I wasn't hearing any opinions. I was just looking at the numbers.
That helps.
And I just looking at the numbers to me without hearing anybody else. And I didn't even pull up the chart at first. I was just looking at the release and I thought, hey, this looks pretty good actually. And then I saw the chart and I was like, okay, well there must be something that I'm missing. But I looked and I didn't see too much, and I interpreted it like what Joel said as a pretty good report, and I wasn't exposed to any opinions, and I don't really know why it was down.
One concerning thing, you cannot deny the drop in or missing the expectations on the growth in Disney Plus.
Is that what it was? I don't.
That's what I think.
For sure it was.
What if that stalls? What if that stalls out?
I've got the service. I don't plan to unsubscribe to. They just added the stars. they're going to keep
Yeah.
adding content. I mean, this, going
So cheap.
direct to Disney Plus from, once we start, Joel, getting actually back fully reopened and they start producing movies. Think about before COVID started when we go back to 2019. Wasn't it at one point in time, Spencer, you're giving us a stat that 12 of the top 13 box office movies of the year were Disney?
Oh, yeah.
Remember that?
Can you imagine they start skipping the movie theaters and going straight to Disney Plus with some of this content? Okay, you can watch it. It's $30. People, that's just a huge moneymaker for them. They already are doing that on some of their content. Nobody makes better content than Disney. I mean, you can argue, oh yeah, no, Netflix, they got some good shows, but Disney is the content king. And we are going into a world where content is given a premium for it. They're going to be able to sell it directly to consumers, bypassing everyone. Disney Plus just works for this company.
What's your favorite Disney movie of all time?
It's a good question.
Are we talking like...
we can't really talk to Star Wars because they bought them. They didn't make them.
Star Wars doesn't count. Marvel doesn't count, right?
Although I will tell you that Mandalorian series that they produced is
traditional
good
Disney. That's a tough question, man.
Yeah. What's yours, Joel?
Herbie and the Love Bug or something like that.
Joel would go off the board for sure. For sure, Joel would go off the board. So.
Kurt Russell. I mean, he was unbelievable in those movies. No, I mean, my girls really loved that. I mean, like The Lion King,
they're all amazing.
And then you got the old classics,
Yeah,
I mean, I don't know.
I was always a big fan of Peter Pan. So
yeah.
All right.
Let's go. Let's move on. Sorry.
So I was going to say, just finishing my point on Disney, is that once the parks reopen, we reinstate the dividend. There's a lot of catalyst. You can see a lot of catalysts here for this stock to make new all-time highs eventually. So unless COVID, the variations come and COVID, kills us all, I think as a reopening play, I think Disney is going to start to price some of that in as well. It's priced the whole stay-at-home Disney Plus portion of it in, but the reopening story is still intact for Disney, and I think it's going to be an awesome reopening story.
The world's strongest man.
I do not own it right now. Like Spencer said, I might own it after today. We will see.
That's right. Dean Jones was the driver of Herbie. I'm thinking of the world's strongest man or something like that.
I'm thinking of the remake with Lindsay Lohan. That's what I was thinking of from 2005. Herbie Fully Loaded. No? All right. Wrong crowd.
Movies. Next.
Okay, now where do you want to go? I mean, we got a couple of earnings this morning. There is a smaller M&A deal.
We got a lot. This is retail earnings season. We're coming into too. So remember, we're going to get this week Tuesday, Walmart, Home Depot. You get Baidu as well, but Wednesday we're getting Target and Lowe's. So we are going to come into the heart of retail earnings season. Look at the earnings calendar that they have put together for us. The Benzinga team. It looks beautiful.
High expectations.
There's a ton of retail's coming. High expectations for Home Depot for sure. But then it's come off in the last. So is there still? Because it came off the last week. It's kind of a good setup because you know what? The Home Depot, if you would have been reporting a week ago, I'd be like, there's no way they're meeting these expectations, but just sold off $20. So now all of a sudden it's like, oh, did the bar lower just a little bit? Because I'll tell you, on Home Depot, they're blowing it away. There is absolutely no doubt in my mind that Home Depot is going to blow it away. I kind of want to be long, but the expectations were so high last week, I probably wouldn't have. But now that it's come down a bit, I wonder, that maybe we should take a flyer on this through the report. It's always a gutsy call to take a stock through the report intentionally. I do it every once in a while. I'm really convicted. I think Home Depot does blow it away. Is it still priced in, or is a 20-point sell-off enough that maybe the high bar isn't as high as it was? Question to you.
I don't know. I looked at this last week, and someone was talking. They were looking for like 295, a 50% retracement. That's when the market was going, and then just like this 320 level. I think I would have been more inclined last week to look at that like 7 lows in that area. So, if you're looking to try and get it on the cheap ahead of the report, I look at the 320 area. I think on the upside here, I don't think you're going to get a big run. 3 highs in a row. This is called 328. So let it digest, but that's great support there. That even though an undercut was that on Wednesday, it went to 1627. That's still a good area. I don't know. We'll see. Full disclosure, been in lows in under $50. Want to sell it? Probably never will.
And if I can bring the calendar back up for a second, I want to mention this calendar is on Benzinga's Twitter account. So if you missed it, just go there. But you got Home Depot tomorrow morning, along with Walmart and Baidu and Macy's. Wednesday, you've got Target, JD, Lowe's, L Brands. Thursdays, BJ's, Kohl's.
On a retail in there.
Yeah, Ralph Lauren, Ross Stores, and then Foot Locker on Friday. John Deere. John Deere is going to crush it on Friday, I bet.
There's a lot of these companies in here are going to crush it. That's, you look at this and you're like, you're coming into the heart where Lowe's and Home Depots and, like you said, John Deere, we know these companies are crushing this earnings.
Yeah.
Like, they're very high probability that they are crushing these reports. Question is it all priced in or not? I mean, John Deere has been running for months as well, but it's been in consolidation for a couple months. But just with, the way, and I can see it with building the house, the way construction is backed up, you know how busy the Home Depots and the Lowe's are. I mean, people are doing stuff on their homes. John Deere as well, the farming, the construction equipment. I can't see them missing either, Spencer. So we're coming into an earnings season now, the second half, you can call it, really the retail earnings season, where these companies are going to blow it away. Does that impact the markets at all? Like, as we keep seeing blow away earnings, does that help the overall market, Joel? Or are they small enough that it won't matter?
What hurts it? I mean, what hurts this market?
It's we try to get bearish, and the SPY just it's relentless.
Like, the inflation number. Don't talk to me about inflation ever again. It was no big deal. Market went down and right back up. It's just the Goldilocks market. I mean, until proven otherwise, and we'll see what happens this week. I mean, we're still, and actually, I was talking with one of my buddies, and the sell-off on Wednesday. Everyone's like, "Oh my gosh, we're the market. It's a correction." We were within the 200 points of the all-time high, people. Like, what are you thinking? That wasn't even the correction. That was
wait, no. That was my argument. Wait a minute. That's what I was saying.
You're young, Spencer. You're bullish. You have to be bullish because you're so young. Well, now you're 30, so maybe you should switch to fixed income. Where's Tim Quast? We need Tim.
Get Tim on here. Bring us in. Bring Tim on.
He'll be on in 1 second. He says he's having some cabin problems.
Oh, we need Tim to save us here.
No.
He'll be on in 1 second. But
all right, want to do one more stock?
Yeah.
Fisker?
Sure.
Did Ride report?
No, they report tonight.
Yeah.
Is Ride supposed to report today too?
Fisker's going to report.
So. Ride's on my calendar for this morning.
Yeah, someone said that in the chat too.
Ride is all messed up because
they maybe delayed it.
So the restate.
I think they delayed it.
There's one stock I'm cheering for. That's Ride.
I am, just for Marcus.
I know.
We love Marcus. We're cheering for you, Marcus. If you listen, Marcus, we love you. You always relax me too. You're so calm. Even when Marcus is in trouble, he's still calm.
Yeah. Oh, you should see the emails he sends. I confirming for tomorrow, Marcus. He goes, "Hey, looking forward to talking about Round with you guys." Okay, wait. Thank you for reminding me, Julie. Well, let's go to Ford for a second here, okay?
Ford.
I put this on the calendar last week, remind myself to remind you, May 19th, which is Wednesday. Ford is at 9:30 a.m. Ford will reveal their all-electric F-150 Lightning at the Ford HQ in Dearborn. This was one of the catalysts for why I owned the stock in the first place.
This is Wednesday?
This is Wednesday, and not at the open at 9:30 is when they're going to unveil their thing. So I'm going to rate that on my list to own extra shares. I own some Ford, but I'm probably going to buy more in the next day to own it into that, not take it through. Yeah.
Take the things through. Like, I'll take my whole core position that I've had, for the last year through, but the extra shares that I'm going to buy for a trade, I'm probably going to sell it right before that event as well. But they'll talk about it in the media. Would not be surprised Wednesday morning. What time is the event?
9:30 a.m., I believe.
Wednesday, 9:30 a.m.? Really, that early?
That's what I believe I saw.
It's going to impact us at the open on Ford. So I'm probably taking it home Tuesday night. Maybe even tonight.
Well, Rich D is saying people don't want electric.
Even right now.
I should just buy it 11.80.
Well, okay. So Rich D is saying people don't want an electric truck. I bought this Ford back when Like this is like last fall, right? When EVs were like the hottest thing. Everybody was launching.
We bought the same day, I think. Me and
Maybe.
Spencer sometimes do the same things.
And the idea was if EVs stay this hot, then won't the most popular truck in the world, the EV version of that, won't that generate some buzz? And that was my thinking, and it sort of worked out that way, but not really. But I'm waiting for Wednesday to see. I mean, either way, I'll probably sell, right? Whether it gets a pop or not. But I bought it for the Wednesday pop or for the Tuesday pop. So we'll see. I don't know. I could be wrong.
We've been talking about this too. I mean, I think the electric F-150 is going to be a huge, one of the biggest EV trucks ever. It's F-150 is the best-selling truck EV. I'm like, I love the idea of buying an EV F-150 too. I have a 3-year-old F-150. Makes me want a 2-year-old F-150. Makes me want to trade in and go buy the new one when it comes out. So I think it's going to be huge for Ford.
I'm sorry. Oh man,
Date wrong?
It's 9:30 p.m.
Night.
What? Yeah,
what?
That's what it
can't be right.
Okay,
I'm challenging all your dates.
It says
now.
It says 9:30.
He's 30, man. It just losing it.
It's 9:30 p.m.
Wednesday night, 9:30.
Yeah.
Holy cow! Why so late? What are they doing now? I'm upset about this whole thing. Our big unveil. Everybody gonna be sleeping. I'm not even awake at 9:30 p.m.
Me neither.
Can't trade.
I'm old.
44 years old. I go to bed at 8 o'clock right after I get done trading.
Am I middle aged now or what? I don't know when that starts. I don't know.
It's horrible. Now I've changed everything. I need to get. We need to bring Tim Quast on and see what the market sentiment on Ford is now. I can't make a decision without the market sentiment information. Where's Tim?
Tim, if you're good to go, give me the thumbs up. And all right, he says he's good to go.
So
okay, we're getting market structure, and he's coming from one of his balconies of his 37th house.
Yeah, I'm sorry you can't see the ocean behind me. You barely you see it back there.
Oceanfront property.
Yeah. So, well, this is actually the next.
We can kind of see it.
There, you can. Yeah, I was out there on the balcony, and technology conspired against me. So I look a little dark. I'm doing my Spencer Israel imitation with the facial hair. So I heard that. So you were talking about Ford.
Yep.
Is that right?
Yeah. We want market.
So what did you conclude?
I like to play the run-ups into the events. So we have a big F-150 electric unveiling, apparently now at 9:30 at night on Wednesday. I'm going to have to verify that time. But usually I like to be long ahead of those events. But I was like, now I have to just get the market structure sentiment on Ford to see if the ducks are all in a row and if I can put on this trade or not. So
can I guess? Can I guess where it's at?
Yeah, please. And maybe we should make it interesting.
I think
we'll put money on where is the market structure at?
How much are you willing to wager, Joel?
Joel will bet on everything, Tim. He will go there. We go to a baseball game and he bets, at the beginning of the season, how much is the average going to move when he gets a hit? Okay, how much is it moving? It's going up 3 points. I think it's going up 3 points. I'm putting the over under at 4.
Will you give me 2 either way?
Joel's taking the bet for
yes.
Okay.
I'll give you 2 either way. So what's your
Lunch.
Bet?
I say it's at 4.
You say it's at 4. Okay, so let's go have a look
because
here.
there's 10 possible.
Yeah.
Yeah, sorry.
It got hit. It's coming back up, but it's not enough to, it's not like a 5 yet.
Well, let's have a look. I'm going to pull up the Benzinga portfolio for today. By the way, if you're listening to this and you're new to these Market Structure Monday sessions, apologies for the instability here, but that's what you get on the beach, and I hope that you can see that.
Living the dream, man.
Yeah,
so
what you can go to marketstructureedge.com, and the amount of time it takes you to put your name and email in, you can follow along. So let's have a look at this, and we'll add Ford to. It's harder to type this way. Okay, so I'm going to add Ford to this. You can tell by the paucity of items on my screen here the state of the market, right? If I've got 10 or 15 things in the Benzinga Market Structure Monday portfolio, it's clearly good, right? Right. So let's add Ford, and we'll see how close Joel came to the correct with the over under. assessment of where we
you
are.
gave me 2 each way.
it's
I mean, this is a lock.
He is so
This is a
close.
lock.
It looks like it's 5.
That's actually really good. So you're learning this, Joel. You're able to make these. Pretty soon you won't need me. You'll be able to make these calls.
I'm
yourself.
sorry, Tim.
So
I'm sorry. You owe me
Joel's
lunch.
head has become your algorithm.
well, and let's explain this for folks. So again, this is not fundamental analysis. We're not looking at Ford production numbers or income or revenue and how those compare to expectations from the sell side. All we're looking at is supply and demand. And does the supply-demand equation justify riding a wave? And stocks tend to do better when they're above 5.0. Very simple stuff. That's the beautiful thing about market structure. It's very simple to understand. And you want short volume at or below trend. So let's look at these two charts. So sentiment is the smooth line. Price is volatile. Price is very challenging to trade. So sentiment here is rising and has returned to 5. Short volume is right at trend. Joel, I would say you are absolutely correct. This is likely a very good opportunity in Ford. And you want to buy rising sentiment and sell falling sentiment. And you can back test this too, folks. If you want to go back and say historically, what has happened if you go buy Ford at 5? We can go test that very easily and see what the history tells us. And that's all we can go on, right? We're trying to predict the future using history, and that's what everybody does. The difference here is that we're using supply and demand to help us understand what's occurring. And that it's the fundamental economic principle is supply and demand. When there's more supply than demand, prices go down and vice versa. So if you just bought 5 and 5, you could make 20% in 90 trading days here. Versus holding it and returning 34%. But we only needed to hold it for 59 days. Notice how much time Ford has spent above 5. 52 versus 31 below. It's rarely at 1. Might tell us that when it's a 1, we should buy it. When it gets to 10, it only has spent 14 days there. That's probably a good time to leave.
It doesn't like 10.
Doesn't like 10s. No, exactly right. Tech tends to like 10s or used to. But that's how you know. You could look at this and say, well, I will have roughly 12 days in the trading period. I rarely stay that long, but we know we've got a pretty good shot at a return here. Could be 3, 4, 5% in 3-4 days, and that's pretty good. That's how you want to think about this.
Tim,
you talked me into the Ford trade, I think. I'm long it already, but I might buy more ahead of this event. So Tim's getting me bullish.
Well, the contrast to that, and there are a great many Tesla faithful out there, and of course we've spent a lot of time talking about Tesla, and
we better talk about it again.
Well, I think it's worthwhile. Clearly, it has discouraged the masses. It's the equivalent of waiting for the savior. When will he return? It's because it's been dismal in Tesla for some period of time.
1 or 2?
Exactly right. It's a 1 and bottomed, and it's only 40% short. So you would look at that and say, well, that's pretty good data from a supply-demand standpoint, in the sense that all of the demand has come out, and there's excess supply telling us that there is an increasing probability of demand returning. The trouble, again, if you went back and back-tested Tesla, is that at 1, it doesn't do well. You don't want to buy Tesla at 1. You want to buy rising sentiment in Tesla. Mm-hmm. And the history really shows us that that's the way to go. If you buy when sentiment rises off of 1, most of the time that has produced returns. But you look at the data, short volume is below trend over there on the far right in the middle, right over here. See, short volume is below trend, and sentiment is right. It's been sitting at 1 for the longest time since February. And at that point, we got a very nice return in Tesla. So traders, that's how you have to think about it. You don't want, this is the difference. How would you know otherwise when you should buy or sell something? And you all, the 3 of you, can talk to technicals and what technicals look like here. But certainly from a market structure sentiment standpoint, you're watching this now. But we're not quite there.
There's no signal to buy this, even though it's a 1 and it's extremely probably oversold. Maybe from this, it's still there's no sign of ticking up here, at least in the market structure.
We're getting this down, Triple D. We are getting this stuff down, Pat.
You are.
We're learning. takes us a little while. Me and
We
Joel
need to
learn
learn.
things about half speed of other people because we're starting to get older now, but brain cells don't
It only
function
took
as
us
quickly
like
as they once
2
did.
months, but we got it.
Listen, if anyone knows about deteriorating mental faculties, you're looking sort of vaguely at him here.
What ocean is
screen.
that, Tim? What ocean?
So this is, let me see if I can give you a better view. The connection really.
Yeah, we don't want to
There
lose
we
you.
go.
there we go.
Holy cow! look at
So
this guy
I mean,
living the
I am
dream.
right on top of the ocean here, and this is the South Carolina coast. So this is
I love
about
South Carolina.
it's really spectacular. And obviously, it's not the ocean that you get near Destin in Florida, but it is a spectacular beach, a very wide beach, and this is about 30 miles south of Myrtle Beach, a place called Pawleys Beach. And
Beautiful.
Second favorite state. Second favorite state, South Carolina. It goes Michigan, South Carolina, Oregon.
Is that right?
Oregon. He always goes out the board somewhere.
Joel has him ranked 1 through 50. Don't worry.
Well, it was a
Ohio's
we had
last.
not.
Is that a state?
It's working on it.
Sorry,
Yeah.
Tim. Go ahead.
No, that's okay. You should have told me, Joel. I had no idea. We had not been to Savannah and Charleston, so we couldn't go to Italy. So instead, we went to Savannah and Charleston, and then came up here to the beach before returning to Denver.
Not
So yeah.
So Tim, well, let's talk overall market for a second here.
Yeah.
Because for the first half of last week, it was like, oh no, there's inflation. This is not good. And then for the second half of the week, it was like, is there really a problem though? I don't know. So maybe you can tell us what transpired from a market structure point of view last week.
Right, and thank you. There are two things that I would say, and the inflation fear trade lasted exactly 1 day. Right, the whole of punditry trumpeted this sudden fear of inflation, and then the next 2 days we soared, and there was deafening silence from punditry. No one seemed to have an answer. But before we get to market structure, inflation does not cause equities to decline. Inflation causes equities to rise. Higher interest rates can cause equities to decline because you change your allocation to fixed income instruments. But higher interest rates are a response to inflation. They are not a consequence of inflation. Inflation is always and everywhere a monetary phenomenon, and no one has challenged that Milton Friedman proverb, and it remains true. Low interest rates are the cause of inflation. So have we had inflation? We have had inflation for a decade because we've had artificially low interest rates. So we know inflation exists. So what does inflation cause? It causes money to rush into risk assets until it's fully absorbed. And then it will cause deflation, the exact opposite effect. So that will come at some point. To answer your question about what market structure tells us about this, easy step number 5 of using market structure edge is managing overall risk. It's a very important principle. I've used this, I borrowed it, I stole this from somebody else, but if I describe to you an awesome stock, but it's describing the best chair on the deck of the Titanic, what good have I done you? And the broad market has overarching authority over everything. And so we use what we call broad sentiment for risk management, which hopefully you can see on my screen. I like to back up 3 months and look at it. So when sentiment is, and I'm doing 30 days here because I want to make a point. This is SPY. This thing moving all over the place, that is SPY. What is sentiment doing? Not moving at all. All right, that tells us the market has no capacity to rise. We are seeing rotation from this thing to that thing. That's what sentiment will tell us. The market has done precisely as sentiment told us it would do. If we step back a little bit, you can see where this condition began. 3 months back, here is the peak. And the market is no higher now than it was then. So when the market peaks, reduce your exposure. You have to be very picky about the things that you trade when this condition exists, because this is how you lose a bunch of money. When broad market sentiment is not giving you any direction, be wary. When sentiment is rising in the broad market, there's your opportunity. When it peaks and falls, reduce your exposure, or it will cost you money. And so where are we? Well, we're right where we were. This isn't over yet. I do believe that into options expirations Wednesday, Thursday, Friday this week, we're going to see some returns simply because options are devalued. And high-speed traders are going to scoop up baskets of those and try to run the price up. Even if today is not a great day, I bet it will be into expirations. But unless and until this trend line of flat sentiment improves, the market is going to struggle to rise.
All right. That makes me feel, that makes sense, and that makes me feel a little better. The constant is what I'm all about.
We got to see one more. We got to see Disney, because me and Spencer were talking about buying Disney today.
Okay.
Is it safe to come in the house of mouse, or are we trying to call a bottom here that maybe we shouldn't be calling?
This is probably like in the 1 to 2 region again.
I think it's low. I think we might be early. We're kind of getting gutsy here with the Disney. 4.2, 4.2.
Oh, higher.
But
nice.
It's falling. But look at the trend. Look at the trend line. 4.2 and down. Don't buy traders. Don't buy falling sentiment. Buy rising sentiment. So
we're too early.
Why are you doing this to me? Come on.
Now he's talking us out of it. We're too early.
I can see Dennis now.
Now we're not.
Dennis is gonna be. This is gonna be Dennis like on the open today. This is gonna be like frozen. He's not gonna be able to.
I don't know what to do. I'm like, my instincts tell me to buy Disney, but the market structure says I'm too early.
The exact wrong conditions exist here.
Oh my goodness, exact wrong. Exactly backwards.
Like, let's short Disney.
Right? Short volume.
I turn around and I just short Disney.
I'm buying.
Right. It almost always is true. So the last time, here it was a 5, but once short volume rose well over trend, price declined. It's not immediate. There's cause and effect. And it tends to be, it gives you 3, 4, 5 days. That's what you know. So 3, 4, 5 days from now, revisit it. And maybe sentiment will have reversed. But right now, this would not be a good time for a house of mouse.
Too early.
Fine, but let it be known. It's done.
He made his decision. You're not going to sway him. He kind of swayed me, though. I'm like, I might just let Spencer. I might just watch Spencer.
No, I said I'm buying puts. I was joking.
Let's see if we can find something at a 10.
A 10. Sure.
Nucor.
9.
I saw it at the bottom.
8.5.
No, Nucor is 10. I can see it already.
Oh, really? Okay.
And Nucor remains an excellent stock to hold. Look at where we are. And we said this last week. We talked about this. Right? So as long as it's at 10, you self-falling sentiment. And it's at 10. And look what short volume did last week. So for 3 days, it dropped. So we were a little above trend, but not bad. It returned to trend. I'd look at this and say, you can stay in that until sentiment changes or short volume moves meaningfully above trend. And so right now, it's a very good place to be in a rocky market.
All right. Tim Quast is the founder and CEO of Market Structure Edge. Joins us every Monday for Market Structure Mondays. The link is up on the screen right there. Tim, always a pleasure. Thank you very much. We'll talk to you next week from a different state.
Sounds good.
All right. 8:57. We'll do a couple more tickers, then we'll go to our IPO guy. Let's do some ticker time from the chat. Unless you have anything on your radar, guys, you want
we can do 3-4 minutes. Let's go.
Do some ticker times, or unless you want to do more Charleston facts, because apparently Joel's just a wealth of knowledge.
Yes.
On Charles. I had no idea, Joel.
All knowing.
So much knowledge about Charleston, South Carolina.
But Ghost Tour? You got to go on the Ghost Tour there, too.
Apparently does. All right, Slow Black, you win. Under Armour, let's take a look. UAA.
It's been a while.
Oh, wow. I was thinking about Under Armour, and because I needed some socks, and they couldn't find any on their site. So it's turning up. It's a retailer trying to get out of the way of itself. I'll just say you got 3 highs in the same area. You got to clear 1930 for another leg higher. Dennis?
I kind of like it, but needs to hold that 18 area.
What about Chewy? I haven't looked at Chewy for a while, I feel like.
I hate it. Even before I looked at the chart. No, it's still going down. I'm going to say if Tim's still here, I think this is like sitting down there, still pretty low in market structure, and I think it's trending down still. I mean, this is just this is your classic growth stock to go way overvalued, $120. It's been cut in half, basically, 67. Some of the growth names have turned, but again, like Tim's saying, we might be early trying to call a bottom on some of these. I've tried to call a bottom on Kathy a couple times last week, and I was wrong both times. So I think I'm just laying off trying to call bottoms, even a stock like Chewy. But great company. The valuation is just silly, though.
Boom, boom, boom. I mean, if you lose to 64, you gotta look at 55, 56. That's what the monthlies are telling you. So if you're leaning on that 64 low, I don't know. I wouldn't hang around at 61, 62 to find out.
All right. What about SE? What are they?
I think it was my best traded stock last year. A stock I hardly talk about on the show, but I love trading SE. It just moves around with the growth names. It's very correlated with a lot of the growth names. Ooh. It's got earnings tomorrow night. So you got a little relief pop, bounced at the 200. It's held the March lows. That's the good news. The bad news is it's still a valuation issue. This is a growth name. It's going to move around the growth stocks. When growth turns, it pops 3 times more than the other stocks. When growth falls, it falls 3 times harder than the other growth stocks. This stock is wild. I like trading it, though, just because it moves around very well with all the growth names, and I pair it up relationship-based trades.
Palms out at 240 if it gets some crazy pop there. That's what I would be.
Me too. I'd be palms out there, too.
Yeah, and 200. Wow. That's a quad bottom. 220.
Middle of nowhere.
Yeah,
middle of nowhere.
All right, we'll do one more. Let's do Levi Strauss. Levi. Off its highs, which I guess is some things.
Trending higher. It's been trending higher. This is a retail play. People are wearing jeans. Jeans are back. Levi's are back.
No, summer's coming, Dennis, unless you're wearing jean shorts.
All right, seasonal. Yeah, jean shorts are cool now.
Are
jean shorts back in too?
I think
are jean shorts coming back in?
They never went out as far as I'm concerned. I think I wore them on Friday.
Get your Levi jean shorts on. I had a pair of jean shorts too. I don't know if I have them.
I don't have mine anymore.
This is tough. Market sentiment is at like 8.5.
Okay.
So it's come off. I don't know. You got great support down here at just call it 27.40 on the downside. On the upside, I don't know, man. I bet you people are saying, hey, if this gets back to 30, I'm going to sell. Too many highs in the same area.
T is almost down below 33. I'm going to do the predict the open cool thing that we sometimes do and say it's going to be 33 on the kisser.
Wow.
Yeah, I knew it when I saw that.
It's getting sucked in. Joel's a great call. I don't think it opens over 33.
Too much in the book. Too much in the book in that stock like that.
And there's a lot of people who just think, oh, I'm in it for the dividend, and boom, I get a $2 bonus this morning, which was insane. Now you're only getting an 80-cent bonus, but people are like, I'll sell and I'll reload down at 32 because eventually it usually comes back, and it probably will.
Okay. I'll let you guys go, but before you go, I want to do one housekeeping announcement. I've mentioned this a couple times last week as well. Benzinga's YouTube channel was nearing 100,000 subscribers, and as such, we are doing a giveaway for that. We haven't launched it yet, but when we do launch it, I will tell you how you can enter. We are giving away a free share of Tesla. That's one thing we're giving away.
I came back for that. I snuck away and then I'm coming back for.
Well, it's not happening today. But I'm that's called a tease. That's what they call it in the biz. I'm teasing this contest. A free share of Tesla. We're also giving away, I believe, one of our nice Shinola watches that we have here in the office. So stay tuned for that. I'm teasing that contest. It'll go live, I believe, tomorrow or Wednesday. All right, guys, I'm going to let you go. Have a good rest of your day. Joel, I will see you for the At the Close show. Dennis, good luck at the Open. I'm going to bring on Matt Hammond here from IPO Warriors. We're going to talk some IPOs this week. What Matt traded last week and what is on his radar this week. Matt, good morning.
Good morning, Spencer. And before we get started, I want to say happy birthday. I understand you hit a big milestone over the weekend.
Yes, I'm 1 day older than I was yesterday. This is true.
Very merry unbirthday to you today.
Thank you very much. I appreciate that. All right, let's talk some IPOs, Matt. Well, first off, let's run through last week. What did you trade? And guys, smash the like for this in-depth IPO segment. Matt, take it away.
And before we get started, guys, sign up for IPOwarriors.com, the newsletter. I've got something really pretty big to disclose this week about what I didn't trade last week, and why I'm going to make sure we don't miss this one in the future. So it's probably what I'm most excited to talk about today. So I'll just tease that out there for now, and we'll get to it very shortly.
Okay, let's go for it.
The ones that we called out last week were iPower and Global E, and both of those gave us pretty good win opportunities. They were fairly straightforward, as we'll see in a second. But the ones that we didn't call out, and there's a reason for it, were digital brands, which doesn't quite fit the profile of what I'm going to talk about here. But the big one was eHome Household Services, EJI, which went up 485% and pretty much followed the same playbook as UTME, which we talked about last month, and W&W, which we've referenced before. And I'm, after kind of going back, looking through my notes, trying to understand what I missed on these, it's now obvious to me. These are stealth IPOs. And that's something that I'm going to explain to you guys in a little bit, but the basic gist of them is they were not promoted, and I believe that that was intentional. They weren't on the IPO calendars. They still don't show up on NASDAQ's list of IPOs that have been recently priced, along with all the other ones that have gone live in the last couple weeks. So to me, there's something fishy going on, and the price behavior, is evidence to that. But that doesn't mean that we can't make some serious money on these. And I did actually make some money on some of these inadvertently. But this is a huge opportunity if we can really nail down what is causing these and how to spot these before they go live. So let's first look at the pretty easy ones. iPower, we knew it was low float. We knew it was a profitable company. There was a pretty high conviction here. So if you bought in at the debut, it was $5.66. You had to wait a little bit. Either you took out some profit right on the initial spike, or you held until momentum built up. We had two halts right here. Anytime I see kind of a little bit of a weak opening and then I see the halts, I want to be taking out my position at each of the halts. Either take all of it out off the first halt. You don't know if this is going to drop back down. If you have a little more conviction, like on this one, maybe take half out on the first halt, half out on the second halt, and be happy with that. If it just continues to run, okay, well, you still made a good 25% on your money. If it doesn't, you don't want to be, if this was your entry down here and it's sort of giving you this baseline, if you really want to let it run, maybe put a stop loss here and just accept, hey, it fell out. But there was no reason to take a loss on this one. And you had the table was set for you to eat a nice little feast here. So take your money out of the halts, be happy with the win. Don't cry over having possibly lost out on future gains if it continues to run. Global E, there was a lot of solid coverage on this. They are profitable. It's another global e-commerce platform, comps to Shopify, BigCommerce, all of those did really well. So this one gave you every opportunity to take profits and still is putting you in a position to have, to be up. So if you got in at 24.25, it's not a huge win opportunity, but a pretty safe one. I just played this initial halt, spike right here. When it traced back down, I got stopped out. That was enough for me. And if you had a little bit more conviction, maybe you held to that end of the day rally. Maybe you held through the second day spike. But these are kind of the traditional exit spots that you're going to look at for a high conviction IPO. I'm usually playing no more than a second day unless there's some extenuating circumstances, like I start seeing a lot of buzz in Twitter. It's got low float, something like that. But on a straightforward play like this, you're looking at this initial spike, you're looking at an end of day rally, you're looking at a day two surge in the the opening hour or two, and after that, it's time to call it a day. You don't really see it continue up from here, and it's very rare that you're going to see further momentum at the end of the second day on a kind of highly publicized mainstream IPO. This one was offered in E-Trade, so you knew that this was a pretty straightforward, normal IPO. And I say that with extra emphasis because what we're about to look at is sort of the abnormal trend where I've taken my biggest wins in the last couple months has been these sort of trends to play the low float unknown IPO. And there's a difference between kind of the unknown IPO and the stealth IPO. And the unknown IPOs are these companies that we haven't really heard of before that have the low float, And they sometimes take the day 2 surge because people are like, oh, this is another low float IPO. We should get in on it. It's going to run like, forgot that one, FLGC earlier, or that was earlier last week. There's one the week before. Yeah, I think it was FLGC, which took a day before it ran. But this one, it was ALF. ALF didn't really run the first day, saw a bit of a run the second day. People are kind of like, oh, is this one of those that it's going to run? Is this one? Well, maybe, let's all get in. Digital Brands is kind of what I would call the copycat or the wannabe. It's not the true stealth IPO. And we're going to look at the next one, which just shows the difference. Digital Brands pretty much dumped out of the open and sat down. If you bought in at 415, you were sitting at a pretty heavy loss here, and you're kind of sitting around twiddling your thumbs. You would have had to have a lot of conviction that this was going to pop in the early market hours today. And what you can see is it got a little bit of social media buzz. People were comparing it to ALF. People were saying, oh, it's going to run like ALF. And if you're in Webull, you can trade this. There's not a lot of shares moving here. But if you're in E-Trade or Robinhood or Ameritrade, you're not even able to exit at this time. You have to wait till 7 in the morning. You can see a lot of people, when they did get the ability to dump it, they dumped it and it dropped. If you guys are looking for a day trade today, keep an eye on this one. If it behaves like ALF, you'll see a bit of a spike in the morning and then it'll kind of die off. For some reason, these will have more volume than the stealth IPOs, and I think that there's a reason behind that. One would think that more volume, people coming in and buying, would send the price higher. But what we're seeing in these stealth IPOs, and here we're going to take a look at this chart and it'll kind of blow your minds, is EJH. So this wasn't on the calendar. This wasn't in any of the apps. This wasn't in anything until the day of, which is really weird when you think about it. An IPO, they're trying to build hype. They're trying to build demand. They're trying to bring a company to market and sell a bunch of shares. But with these, like we saw with UTME and we saw with W&W, there was almost no hype. They didn't even show up on the NASDAQ calendar. It's almost like they intentionally snuck this into the market so that they could manipulate the price. And who is they? Well, that I'm not entirely sure about. I've gone and asked some friends who are a little bit more technically savvy on how markets work, and one of them said, oh, this is clearly money laundering. They are moving money from one account to another by laddering trades, putting in specific trade value, like share values, and saying, fill all or none. And they're transferring value from one account to another through this manipulated price. And when you go back and you look at, and I was watching this one live, but had not played it because I was just like, oh, it's a laundry company. I mean, it's a housekeeping and appliance maintenance company in China with offices in the Cayman Islands. Now, in retrospect, that is the signal to play this. This is like not a real company in terms of, it's not worth the $1.8 billion valuation it closed the day with. It's a relatively small company that does a very boring service, for which there are, I lived in China for 10 years. It's not hard to find a maid. You don't need an app for this. But this opened at 1660, and on very few trades, a very low volume of trading, it jumped up into 3 consecutive halts. Now, that can be done fairly easily if there's only a small number of traders trading back and forth, setting high limit orders and meeting those limit orders. You could theoretically trade a stock up into a halt, with one share, selling at over 10% of the open market value. Then 10% higher is going to trigger that halt. So with very few trades and very few shares moving, because nobody was aware of this, I mean, this priced at $5.50 and debuted at 1660, which is not, you see that with companies like Snowflake, not with companies like eHome Household Services. There's clearly something funky going on here, but it does look so much like what happened on days 2 and 3 of W&W, what happened with UTME, what happened to FITX. And all of these were unpromoted until the day of the IPO, which is why I'm calling these the stealth IPOs. And now that I know this, now that I recognize this, I am going to be sending out newsletter alerts on the mornings when I see these, because W&W I totally missed. It wasn't until 3 days afterwards when I'd seen all the trade halts. So I was like, wait, this was an IPO? How did I miss this? TIRX, I actually did play it just because someone was like, hey, Matt, How come you didn't tell us about TIRX? I was like, oh, it's today. Okay. Well, this is a huge indication price. I'll play it anyway. I bought 1,000 shares. It debuted at like 16 and spiked into a halt, opened up at $49.99. I made $33,000 on one trade like that. And then I totally missed EJH for the same reason and didn't put 2 and 2 together. But now that I see it, the fact that they are doing it in a way that's not very publicized, that's not getting on my radar, and now that I know how to see these, I'm going to play every one. It's at least worth a spec play. UTME, I was in on it. I played it a little bit. I didn't see how it was going to. It went into 9 consecutive halts, and now that we've seen this a few times, the trend is starting to appear. So when we see it, especially a Chinese IPO with a low float that shows up out of the blue, I think it's worth taking a play on it. Anyway, as I said, stealth IPOs are not listed on the IPO calendars. They're not covered in any financial media. They're typically low float, and the prices appear to be manipulated by low volume and very high ask prices that get immediately filled. One of the companies, Boasted Securities, has had a couple of these IPOs that have had pretty insane price runs. They did WNW, they did UTME, they also did eBet. eBet was a little bit of a maybe didn't fit this profile.
Yeah. Are all three of these Chinese companies?
eBet is not, but all 3 of these other ones have been. But that doesn't mean every Chinese company has done this. We saw OG Onion Group completely, and it sort of looked like it, except that it was on the NASDAQ calendar. It was promoted. That one OG was that social media e-commerce platform. Whereas these, eBet was just a Boasted Securities. I wouldn't call it a stealth IPO, although it did offer a huge run up. The market is still, and I'm talking with other people who specialize in IPO trading. I have my group where we discuss these things, and I follow the Twitter feeds, and people are confusing low float and Chinese with this sort of like subset of those, which are the stealth IPOs. And so people get focused on the ones that are publicized, and they start talking about it a few days earlier. And we've seen some of these have, that have a float of, say, 3 million shares. The volume will be something like 6 million shares traded by the end of the day. And you'd think, oh, these ones that are super hyped and have more attention, these are the ones that are really going to fly. But that hasn't necessarily been the case, probably because day traders jump into it and they start selling it at their targets, and that pushes it down. Whereas these stealth IPOs, we see volumes like on a 5 million share float, like only 1 million shares trading in that day, which is, instead of double the number of shares that exist, trading 20% of the shares, which is almost normal for an IPO day. And on those, we've seen, it's almost like the price laddering is that much more effective, and they're able to drive these prices into, really ridiculous. You think about it, who's going to buy a house cleaning service IPO that's priced at $5 and is showing an indication price at $16? Nobody, except somebody who's like, no, I'm going to control all the shares, and then I'm going to very slowly ladder this price up. So I'm going to be aware of any of these IPOs that get announced on the day of, especially if they're Chinese. Doesn't matter if it's insurance, house cleaning, cell phones, traditional Chinese medicine. The fact that it was house cleaning and home services and appliances, should have been like hammer on the head. Hey, laundering, maybe.
Well, all right.
Okay. Maybe. So just look at, and just to reference Wunan Technologies. Yeah, it did do an initial spike here on day one, but it was pretty flat. To me, this is the one where they kind of first figured it out. And then day 2, it ran up to, I think, like 70 and 80. Day 3, it peaked at 160. Now it trades at $7. Next one that we talked about earlier was we were actually on the day of. I kept saying U-Time, look what U-Time's doing.
Yeah,
like it started at 1140 and peaked at 107. This one did kind of rally again.
This makes no sense though.
It makes no sense unless you don't see it as a stock trade. There's something funky going on. I've heard, or one of the ideas we were discussing in my group was maybe Chinese are figuring out how to move their money out of China, because it's very difficult and expensive to move money out of China. But if you get an account in America, an account in China, trading accounts, and you're the only ones trading, you can be the one selling from China. You can be the same person buying in America, or the other way around. And, you could move money, transfer money out. And if no one else is trading on that stock and you're kind of accounting for the majority of the volume, you can assume or expect to have a result that is the transfer of funds from, your one account to another account. And there is something fishy going on here. I think we can all agree that. Figuring out what it is interesting, but less interesting than figuring out how to identify these so that we can profit on them.
All right, here we go.
Anyway, I will keep you guys updated. I sent out newsletters about it. It's in the discussion space. Come over to ipowarriors.com, sign up for the newsletter, join us in the Reddit group. It's that one in the middle, our IPO Warriors, if you're interested in learning more about this or contributing to that discussion. Okay, we have a smaller IPO calendar this week, but that doesn't mean they're not interesting. We do have Squarespace, which is a direct listing. I think a lot of you know what Squarespace is. It's kind of like a Wix style hosted website builder. We've got Procore Technologies, which is one of the largest construction management software platforms. It's a cloud-based software as a service that provides solutions to the construction industry. And then we have Oatly, which is interesting. It's a oat-based milk formula, which I have not tried, but reading in the reviews, and it's definitely getting a lot of attention, and people seem to like this product. So let's jump right in to Squarespace. Squarespace is a direct listing. If you are familiar with Wix or you do anything on the internet and you watch YouTube videos, you have probably seen a lot of Wix and Squarespace ads, if not actually having used these to build websites. Some people is trying to make a comparison to Shopify, but I think that's kind of a stretch, even though you can build. You have something to add there?
That's a stretch, the Shopify thing.
Right. So it really is more like Wix, although it does offer e-com. You can build like a web store with subscriptions, bookings, that kind of thing. The thing that kind of turns me off a little bit from this is that it's a direct listing, and that direct listings really need to have a lot of public interest for them to do well. At least that's what I've seen. It has 20 consecutive quarters of subscriber growth. Okay, that's solid. 3.6 million subscribers. It's been profitable since 2016. It's also pretty solid. They are coming to the market with 40.4 million shares, and you kind of have to see where it prices to be interested in this. Wix, which has kind of has 55 million shares and a market cap of 12.5 billion, is priced at $222, but it came down something like 30% in the last 2 or 3 days. So Wix is kind of crashing at the moment. When I look back at the most recent direct listings, I see kind of Palantir went from 10 to 11 in the initial few minutes, tailed off back towards 10, and then spent a month down under 9 before it kind of caught a headwind as a Reddit meme stock for a while there. I don't see Squarespace getting that kind of boost at any point. We see Roblox did actually perform pretty well off of its direct listing, but it's that was already a meme stock before it went live, and it has incredibly strong growth. It has a lot of catalysts. And then we just saw Coinbase, which seemed to have everything a stock would need to fly off the debut, rallied for about 10 minutes, and since then it's just been a complete dumpster fire for anybody who held it, including part of my trade is still deeply underwater on that one. So I'm probably just going to sit back and watch this one. I can't see a very compelling reason to buy in, especially if they price it at $60 or $70 or $80. There's just too much room for it to fall down, and I don't have a ton of I personally don't. I am a website designer and developer. I don't love Wix or Squarespace. I like Shopify. Not talking about it as a stock, just as a platform for building with, and kind of interesting, but not super compelling to me. Okay, Procore. This one is interesting to me, and I will probably be playing this one. It's a cloud-based construction management SaaS. They handle everything from planning, employment, procurement, managing the actual platform, handling payments, ongoing. They're really end to end, and they've come in and pretty much dominated this space. They have 1.5 million users in 125 countries. They have $113 million in Q1 revenue this year, which is up 23% over the revenue in 2020, and that's while going through a pandemic. They had actually planned to IPO in February last year and decided to postpone it due to the pandemic. And it's a pretty small float. I mean, it's not microscopic or tiny, but 9.5 million shares essentially is relatively small for a mainstream IPO. I think this will have a lot of institutional interest, and I've been aware of this company for several years, and I feel like it's a pretty strong play. If the market's super cold, the IPOs haven't been as strong, but they've still offered wins. If the market's hot, I like this even more. But this is one that I would say, yeah, play this, take that first spike out, at least for some profit. This could even be a day two runner. I think it's a pretty high conviction play in my book. And the last one on the calendar for this week, at least the calendar right now, we have to watch out for those stealth IPOs, is Oatly. And Oatly is a oat milk, which there are many. If you go into, I'm not in the States, but I know that people are talking about this one a lot on Reddit, on Twitter, and saying, oh, there's a lot of oat milks on the shelves. But people say, well, Oatly is not just on the shelves. It's being in Starbucks. It's the one that's always sold out. It's a highly popular, it's kind of the best of breed leading oat milk. 7,500 retailers, 10,000 coffee shops, just in the USA alone. It is coming to market with a pretty high valuation, $10 billion for a alternate food. But when you look at what BYND did, it kind of got this, which also is way overvalued, but it's got this sort of like hype hysteria. Hey, the future is not milk. Cows, are mishandled and mistreated, animal rights, good for the environment. All these things contribute to Oatly having, a pretty solid promotion vehicle behind it. The float is pretty big, 84 million shares. That is going to need quite a bit of retail demand to drive the price up from there. But I still think it's worth at least a partial play. I might not go full weight behind this, but when you look at what BYND did off of its IPO and the valuation that it's been able to maintain even with the recent pullbacks, Oatly kind of fits that bill of what's trendy right now.
And that's it for the week, right?
Yeah, it's a pretty small pretty short calendar. Again, keep an eye out for anything that shows up unexpectedly, especially if it's a low float Chinese company. I'll be sending out alerts through the newsletter at ipowarriors.com. So sign up if you want to get an alert for that. But that's really where my focus will be, is always on the high conviction plays. And now I'm really going to be paying attention to these stealth IPOs because I don't want to miss out on the next. I've been lucky to stumble into a couple of them. I've short armed or completely missed a couple, and now those are checking every day. Got my signals, got my other channels set up to get alerted of those. But yeah, short week. Enjoy trading, guys.
Matt Hammond runs IPOwarriors.com, joins us every Monday to give us a rundown of the week. Matt, thanks a lot. We'll talk to you again next week. Watch out for those stealth IPOs. The link is up on the screen right there. All right, that's wrap it up for me this morning. David Green is up next. He'll be live trading through the open until about 10:30 or 11, give or take. Guys, if you haven't already, give us a like. Hit that like button on YouTube. Thank you very much. Let's get to 500 likes today if we can. We got David Green, we got Spax Attack, we got the Power Hour, Get Technical, our new Moon or Bust show at 2 o'clock, which is a crypto show, except they don't talk about Bitcoin or Ethereum. They talk about the other 98% of the crypto market, the altcoin market. That's at 2 o'clock Eastern time today. We got the At the Close show, Money Mitch later today, Making Bread with Shed, L Report. So a full slate. You can find the full calendar on our Twitter feed. Thanks again to our guests, Matt and Tim. Today's show was sponsored by Market Structure Edge. Try the new way to trade for free, marketstructureedge.com. Last thing, please remember all the information from our show was meant to be used as informational purposes, not for investing or trading advice. Oh, man, we're about to open, which means it's my time to go. Everyone, good luck at the open. I'll see you later.